Dinarland talk from Breitling, MilitiaMan, KTFA, RayRen98 and more. First up from Breitling. The US dollar was put in to compete against the dinar, and then they started printing more dinar so they could artificially keep the price down. So they're reversing that now. They're taking dollar off the market. That's exciting. The most important piece is that Iraq is a one-crop economy. They're trying to get out of this, and that's where the ISX comes in, especially if they get on Nasdaq. They're trying to get out of this one-crop economy. That's why it means something to me. They have said it again and again and again. We don't want to be a one-crop economy. If you take all of the manufacturing and what they produce in the Middle East, outside of the oil industry, they produce less than Finland. That's Iraq and Saudi Arabia. That's all of the Middle East. You think they are not aware of that? They are going to do this in tandem. They are going to stage this so that they build their economy up with the ISX and with the new value of their currency. Next up from MilitiaMan. Urgent from Iraqi TV, Association of Iraqi Banks seeking to link local banks universal. July 13, 2017 article. America invites the Association of Private Banks to participate in the Arab American Banking Conference in New York. So from the past July 13 article, they tell us they are having a powwow in the USA to showcase the Iraqi banks, and one has just hit the top 1,000 banks in the world, we read today. Article, the Association of Banks seeks to link local banks to the universal. This has been in the works for a little while now, in my opinion. Iraq's security and stability has increased there by raising Iraq's credit rating. They are also telling us today the MC cards for all can be used freely for just about every global transaction appropriate. For that, the banks need to be universal in that regard. Next up at KTFA. A few tidbits from Monday Night Call August 21, 17. From Frank 26, no dates and rates here. We study as to what is happening in Iraq concerning the monetary reform. We believe that there was an activation of ATMs with lower denominations. August 20th, our friend, Walking Stick, said that we are live, and that post was in our forum yesterday. We believe that information is going to start seeping out after August 21st. Iraq regional elections are on September 18th. It would be wise for Abadi to announce the monetary reform before the elections. September 1st to 4th are Islamic holy day/holidays. Based on iTeams and the reports coming in, something is going on in Iraq. I wish I knew exactly what is going on. Arab nations are all rallying around Iraq. We believe Iraq is going international. In my opinion, Iraq is past Article 8 and they will announce it when they choose to. Delta banking system is internationally linked already. Regional elections coming on September 18th. There is a rate coming from CBI any day. From Dawn 961, inflation the most pressing riddle facing central banks. Apart from the risk of a stock market correction, there is no evidence of disinflationary threats like those that emanated from the financial crisis that started to smolder a decade ago. Stock markets have spent the year rising on bets of a resurgence in inflation, while central bankers trying to manage the global economy have spent the same time repeatedly reassuring everyone it's just around the corner. Policymakers gathering at an annual monetary retreat in Jackson Hole, Wyoming in the coming week no doubt will be collectively pondering why the textbook rule that says low unemployment leads to labor shortages, then higher wages, and then in turn higher inflation, isn't working, news outlets reported. Yet the global economy is growing strongly. Apart from the risk of a stock market correction, there is no evidence of disinflationary threats like those that emanated from the financial crisis that started to smolder a decade ago. The latest Reuters polls of more than 500 economists covering more than 45 economies around the world showed almost no move in inflation expectations since the start of the year. Measuring core inflation, analysts who follow the European Central Bank have been equally disappointed that after spending €2 trillion, $2.35 trillion, or so buying mostly government bonds, it's only running 1.3% Eurozone inflation, still well below the 2% ceiling. Some measures of core inflation are even lower, Reuters reported. Frederic Ducrozet, economist at Pictet, has taken heart from a recent trend move higher in the super-core Eurozone inflation rate, which excludes the cost of package holidays. The trouble is, the euro is on a tier higher. That is a reflection of vastly improved economic performance by many Eurozone economies this year, but as the common currency climbs, it acts as a drag on exports and tamps down imported inflation. Flash Eurozone purchasing managers' surveys in the coming week are likely to show continued strong business activity, but with tame price rises. ECB chief Mario Draghi, who famously sent shockwaves at a speech in London 1 month before the Jackson Hole summit 5 years ago proclaiming he would do whatever it takes to save the euro, will not be making major policy comments. To some, that underscores how little progress there is to discuss. This in itself suggests that the Governing Council remains to be convinced that it should announce its quantitative easing tapering plans at its next meeting in September, notes Victoria Clark, economist at Investec. Not in Fed's hands. Fed Chair Janet Yellen will also speak. However, with minutes from the Federal Open Market Committee's latest deliberations showing concern about soft inflation, she is not likely to give new guidance on policy. Indeed, arguably the biggest influence on U.S. inflation in the near term is completely out of the Fed's control. Come September, the reality may hit that prospects for sweeping U.S. tax cuts, one of President Donald Trump's biggest election promises and the basis of a surge in business confidence since he won the White House, have stalled. If the stock market gets a chill, the Fed may no longer be able to rely on an argument regularly touted by New York Fed Chief William Dudley that looser financial conditions justify the case for tighter monetary policy. All around the globe, but the weak inflation trend is not confined to the United States, Europe and, of course, Japan. With few exceptions, national statistics show inflation remains low just about everywhere. India, forecast in the latest Reuters polls to be the world's top-performing economy this year with more than 7% growth, and also an economy notorious in the past for running persistently high inflation, reported inflation hit a record low of 1.54% in June. The Reserve Bank of India cut interest rates into that roaring strength the same month inflation hit a record low. South Africa, emerging from recession, is running inflation below historical averages, and its central bank may cut rates again as soon as next month, and most likely by November, according to the latest Reuters poll. Even in Brazil, which is beginning to emerge from its worst recession in about a century, inflation has crashed from more than 11% last year to below 4%, leading the central bank last month to lower its inflation target. Mario Draghi, L., and Janet Yellen at the Jackson Hole Economic Policy Symposium in Jackson Hole, Wyoming on January 7, Tuesday, August 22, 2017. Tuesday, August 22, 2017. China's $18t corporate debt is world's highest. China has much more debt than disclosed by the central bank, particularly in the shadow banking system, and that this soaring opaque debt could have nasty consequences. Corporate debt in China has soared to $18 trillion, or 169% of the gross domestic product, the largest pile of corporate debt in the world, according to the Bank for International Settlements. The OECD warned about it earlier this year. The New York Fed warned about this debt boom in February and that it could lead to a financial crisis, but that authorities have many tools to control it. The IMF regularly warns about China's corporate debt, broken record-like, and did so again a few days ago, lambasting the authorities for their reluctance to tamp down on the growth of debt. The current trajectory, it said, could eventually lead to a sharp adjustment, Business Insider reported. The Chinese authorities, the government and the central bank, supported by the state-owned megabanks, have allowed some bonds to default, rather than bail them out, to make some kind of theoretical point, and they have been working furiously on a balancing act, tamping down on the credit growth that fuels the economy and simultaneously stimulating the economy with more credit to keep the debt bubble from imploding. A misstep could create a global mess. Everyone knows there's a credit problem in China, but I find that people often forget about the scale. It's important in global terms, Charlene Chu told the Financial Times. Back in 2011, when she was still a China banking analyst at Fitch Ratings, she went out on a limb with her radical estimates that there was much more debt than disclosed by the central bank, particularly in the shadow banking system, that banks were concealing risky loans in off-balance sheet vehicles, and that this soaring opaque debt could have nasty consequences. Her outlandish views at the time have since then become the consensus. And this pile of debt is in much worse shape than officially acknowledged, she says in her latest report, cited by the FT. She's now with Autonomous Research. She figured that by the end of 2017, bad debt in China could hit 51 trillion yuan, or $7.6 trillion, or about 68% of GDP. It would take the bad debt ratio to an astronomical 34% of all loans, and way above the 5.3% that the authorities are proffering. And the authorities, the government, the central bank, supported by the state-owned banks, are now pulling all levers to keep this under control. Superficial appearance, what I've gotten a greater appreciation for is how everything is so orchestrated by the authorities, she said. The upside is that it creates stability. The downside is that it can create a problem of proportions that people would think is never possible. We're moving into that territory. By orchestrating this superficial appearance of stability of the bad debt problem, the authorities have over the years allowed and encouraged this problem to get much worse. Chu's methodology, as the FT pointed out, is not without critics. In particular, her estimate of RMB 51 trillion in bad debt is based on average credit losses across 11 other economies that previously experienced rapid debt increases comparable to China, including Japan in 1985-97 and the US in 2000-07. But Chen Long, China economist at Gavkal Dragonomics in Beijing, said this methodology implicitly assumes that an economic crash will eventually occur in China. But if that economic crash doesn't occur, and if the economy continues to grow, credit will perform better, and loans won't go bad to that extent, he argues. The government understands this too. Hence the mantra that growth must be maintained no matter what the costs. But since that growth is debt-fueled, and since it is now taking more and more debt to obtain diminishing growth rates, the math gets a little tricky. So an acute crisis does not appear imminent, Chu told the FT. The authorities control the state-owned megabanks and can tell them to lend more even to zombie companies, many of them state-owned, to refinance non-performing debts, to lend to smaller banks that rely on interbank funding, and to support the debt bubble in other ways. This keeps the money flowing. It has kept a credit crisis from toppling the system. And as long as the megabanks have the total support of the authorities, they won't topple either. From RayRen98. Best sources are saying, it's coming, it's coming. That's all I can get them to say right now. Cards outside of Iraq are active but appears they are still on the program rate. We had the understanding it would be at the new rate. Contractors the same. Going on the assumption lower denoms are not out yet. He said a lot of people are being quiet. Historically the IMF has always released international public rates in April and Sept. So, with what we are seeing now, we are close folks. You agree? I'm with you, your information is on the right track. We just don't know the exact minute, exact hour, exact date, exact week, or exact month for that matter. You can rest assured the exact minute, exact hour, exact day, exact week, exact month, if it's not already here, it is going to come. That I do believe. More at iqdcalls.com.